Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. A surprise. We just got the numbers in for the third quarter for the national benchmark. And like I said, there was a surprise there. The surprise, if you remember, we talked about last quarter actually continued and improved. And what was that surprise? Well, it was the net interest margin for all of the community banks across the country. If you remember, our feeling and the way that bankers have been talking is a declining net interest margin because of these continued low interest rates. Yet, amazingly, we had a slight uptick last quarter and it's continued into this quarter. Quite amazing. But the thing that is even more amazing is take a look at this. Trend in yield and earning assets went actually where it was relatively flat last quarter, actually ticked up a couple of basis points in here. And that's really surprising based upon where the loan market is in here, where the investment market is compared to the cash flows that are running off. So what could be happening? Well, also on the cost of funds in here, you've seen that continue a slight decline in here, adding up to that increase in the net interest margin. But we still have to come back to this trend in yield and earning assets, because what is the national benchmark doing? Are they starting to take more interest rate risk in here, moving out on the yield curve to try to pick up yield, to try to keep those margins increasing in here? So when we look at this as a situation, is this a positive situation, or does this spell risk as interest rates start to lift in here, starting to move upward, that we could see problems coming about with that national benchmark group in terms of repricing as rates head up? Have a great week. This is Jay Brew, co-chairman of Seafried and Brew.